We are live, episode 38 of the Recap Room podcast. If you're watching on video, this is going to be the first time you're going to see us filming anywhere with a window, which is honestly really nice because every single time we've filmed before this, including my last office, our current office, we've filmed in. I mean, it works. I'm not going to say it doesn't work.
I mean, I thought it looked good.
You liked it.
Yeah.
I know. Asher liked it, but I'm just like, I don't know. There's something about having some actual natural light, especially come wintertime. You need a little vitamin D. So if you don't know where we are, we're in Lincoln Park. But if you see the backdrop right across from the Equinox, we've got Lincoln Commons. We've got, some VR.
We got Sweet Green.
We got Sweet Green. That's Asher's favorite. Asher loves paying $30 for a salad.
Honey chicken salad.
Business must be doing really well if he's paying $30 for salads. I love it. But so today's episode we have on Asher and Quinn from Essex Capital Markets. Honestly, I know what they do somewhat, but really I don't know a ton of what they do. Just being totally honest, because I'm a residential guy, deal with the most commercial close thing I'll get to that is doing 2 to 4 unit building sales. Anything over that, which is still a residential loan. Yeah. Anything over that, I'm referring out to probably somebody at Essex, a broker there, or just a commercial broker in general. It's not my forte. They're commercial lenders, is what my understanding of it is, but I want to pass it on to them to kind of introduce themselves. Start off with Asher, who I've known for a long time, Quinn, who I've known through Asher, but just met for the first time today. So Asher, kick us off. Who are you? Where are you from? Give us a little background about you. I know you're a hockey player.
It feels like a hockey interview I'm on.
It is.
It's like after the second period, it's like, hey, so like, what do you think the boys can do differently? And
think of this as your Spittin' Chicklets episode that you never got.
I texted him. I go, you won't know this, but there's on the Spittin' Chicklets podcast, there's a guy named Biz Nasty, and he's
I know.
I texted him. I go, I'm gonna go Biz mode today.
I'm like, perfect. We'll just have to bleep a few things out if this stay a little more PC than Biz does. But
yeah, I want to see that.
We will
accent come out.
But yeah, so thanks for having us on.
Absolutely.
Super excited to be here. Long time coming. I think I texted Mike about it. I was like, hey, when you gonna get us on here? I think I saw...
Well, no, Asher texted me about this before he was even in the business. He's like, I want to get on your podcast. I'm like, dude, you have nothing to talk about. Like, what are we going to talk about? Hockey the whole time and life? He's like, oh, yeah, whatever. And then he ended up, I don't know, however long ago you became, started working for Essex.
Yeah,
and
I'll get into that.
Yeah, and so...
Yeah,
perfect.
Today's the day.
Yeah. So yeah, like Michael said, my name's Asher Mo2. I work at Essex Capital Markets. I am a director there. Alongside me is my co-director, Quinn Keenan. We are, like Michael said, we're over there running the platform. We'll get into what we do. I think a little bit down the line, I just kind of want to give a little overview of who me and Quinn are, what are our background. So I'll go first. I grew up in Highland Park, so I am a Chicago kid, born and bred. Been here my whole life. I played competitive hockey growing up, so that was a large part of kind of how I spent.
He's a goalie. That's why he's so weird.
Yeah. You may come to realize, even though I am on the more normal side of goalies.
Yeah, I agree.
So for all my goalie listeners that are out there, I'm sorry. But yeah, so played hockey growing up. Went to Highland Park High School. Played a little bit of junior hockey if people on the show are familiar. Was up in Madison for a little bit before I ended up getting double hip surgery, which kind of brought me back to Chicago. Ended up playing club hockey at DePaul, studied finance and real estate. I have roots in real estate. My family does, development. They do investments. They do leasing management. All here throughout the city. They probably own around 1,000 units. So real estate has always been in my blood. Knew I wanted to get into it. I started out at JLL. I was there in a corporate finance rotational program, which was great. But I think I remember calling you and being like, hey, man, like, I don't know what I'm doing. This just like isn't what I thought. Yeah. I didn't know going into college. I was a senior, right? You don't actually know what the different verticals or different words are. I was like, oh, great, JLL, a real estate company.
Your whole life, you were focused on hockey up until that point. So 100%. It's like...
And now, I did internships. Like I knew what was going on.
But generally speaking, like I think it's that junction in so many people's lives. They get to that point either in college or right after college, or if they don't go to, it's like, okay, what am I now? Yeah. Like what am I going to do now? Because school only teaches you so much, right? Yeah. Like, it doesn't really, like I think we all can agree, school really doesn't teach you.
I told Quinn and I commended Mike, because obviously you've been crushing it for a while and you didn't finish.
Yeah.
And so
I always joke because everybody always says like with family members like my girlfriend she's 100% Polish, like immigrant family, or like they're always proud like, oh, I'm the first in my family to go to college. Like it's a common thing to be. I'm the first in my family to not go to college.
Yeah.
So I kind of did the opposite. Like everybody in my family went to college. I did, but I didn't finish. But yeah,
I think
Part of
honestly,
the game plan.
yeah, I guess so. God's plan.
I mean, who knows, dude? Like if I didn't have hockey, who knows what. I mean, I probably would have still gone through school based on what my parents.
For sure, yeah.
But hockey was a big driver in that. Getting an extra 4 or 5 years to play college hockey, that's why I wanted to finish. But after DePaul, like I said, I went to JLL. Was there for a little bit. But again, like I didn't know what I was talking about, or I didn't know what I was doing. Was in their corporate finance rotational program. Didn't really have any exposure to actual real estate. Like I could have been doing corporate finance at Colgate, like the toothpaste company. It didn't really matter. So very quickly networked. I was there for 6 months. I'm a big networker, love relationships, love connections. I think this is my like foreshadowing into why I ended up doing commercial mortgage brokerage. But
And that's what the type commercial mortgage brokerage.
Commercial mortgage brokerage. So we're not direct lenders. We are the middleman between a client and any type of lender, whether that's a bank, whether that's agency financing, whether that's a credit union, debt fund, life insurance, you name it.
So in the so I guess the on the residential side, that's similar to just like a commercial broker versus like going direct to like Wintrust Bank. So if you work with a lender at Wintrust Bank, you're going right to the source of the lender, versus if you go to somebody who's a mortgage broker, they'll shop it around to
like
different.
Someone who works at Guaranteed Rate,
right?
Like we have a good connection of ours. We send a ton of residential financing to. His name's Peter DeYoung. Shout out to Peter. So yes, it is very, I guess, similar in that sense. I mean, residential, there's not as many lending options, right? You're either buying and selling. Maybe you're doing rehab to a house. With commercial, it's ground up development, buying, selling, refining. There's all different reasons that someone would need financing. But yeah, so that's essentially what our title is: commercial mortgage brokerage. Wrapping it up on my story so we can get into Quinn a little bit.
Yeah, I can't wait to hear this. We talked before this, and I'm like, I cannot wait to hear about this guy.
It's the best.
I already know all this stuff about you.
I'm just.
I want the people to hear, obviously, but I don't know. This is gonna be a treat for me.
Asher's got a good story.
He does have a good story.
Yeah, it's not too bad.
No, it's a great story.
I think it's like the origin story of like Darth Vader and then Luke Skywalker over here.
Yeah,
how we come together.
And you know what? It kind of looks like that. I see that.
It's a perfect yin yang. I think we'll get into when we talk about deal stories. We'll get into that. We have some really funny ones.
Yeah,
but
you guys seem to work really well together.
It's a good yin yang, and it has been paying off in a very quick amount of time. But all right, let me wrap up my intro, and we'll get it to Quinn. Went to Waterton, so I networked out of JLL. This is some advice I give. We're hiring for an analyst, so this is where this is coming from.
Free plug.
Yeah, right. Like I guess if you need a job, just feel free to apply. But networking, right? Getting your name out there, not being afraid to talk to manage. Like I was at JLL in the corporate finance division as a analyst in a rotational program, reaching out to managing directors on capital markets because I was like, I want to be in that office. I would show up to that office to introduce myself. I just like refusing to take no for an answer. I feel like is a lost art these days.
You don't have like that. I always said this. I was talking to my parents about it. Like you don't have that like fear of rejection. And maybe you do, but it doesn't show. Like you're like compared to the average person, yeah, dude. Like you, in my opinion, I feel like you're like okay, like whatever, on to the next.
It's brilliant. I mean, the fact that you found a role in commercial mortgage brokerage is perfect.
Landed perfect. Yeah,
it's very
works well with your skill set.
It's
it's why he's good with the ladies. It's why he's good in mortgage brokerage.
It's more of a, I mean, my little brother plays at University of Maine, and he's doing well, but he's not playing as much as he wants. And right now, my dad and I are talking about something about how to be better and separate yourself from the crew. Business is no different.
Yeah.
It is the most competitive sport there is. It is because it's 24/7. You're competing against a lot more people than you were in your specific sport and your specific age group. And so that is why I think I ended up finding my way to Essex. Before that, I was at Waterton, which is a institutional multifamily private equity real estate firm based out of Chicago that owns all over. And eventually that launched into Essex. I had been all over these guys, and this will be our bridge to Quinn. I'd been all over them for probably 6 months before they finally gave me an offer. Again, goes back to that resiliency. I came over to Essex in April, and we've been kind of hitting the ground running since then. We have a little backstory as to some company changes we had this year, but let's get to Quinn's intro.
Yeah, let's pass it over to Quinny Boy. I want to hear all about Quinn.
The nicknames are already coming out.
Yeah, I'm like, this is how I know I like him. I'm already giving him. We haven't even known each other for 12 hours, and I already am giving him a nickname. So, Quinn, tell us about yourself. Where are you from? And give us a little background.
All right, well, I appreciate you having us on.
Absolutely.
I like the new venue. Have some natural light, cool Lincoln Park setting, so thank you.
Absolutely.
So Quinn Keenan, also at Essex Capital Markets. I've been around for just under 2 years now. So I've seen the entire process up until this point, and it's been a hell of a journey in the best way. Some ups, downs, and definitely more ups than downs.
Yeah.
And I think of the downs as learning moments to add fuel to the fire. So I came from the North Shore, another North Shore guys.
Yeah.
I think this is the trio.
We just worked our way up. We just work our way more progressively up north as the thing goes around. You've got where you're from, then Highland Park. You got Vernon Hills. I'm the furthest one.
Yeah.
But, yeah.
And I went to college down in New Orleans, and for college, I got recruited to be on the sailing team. So I sailed at New Trier, got recruited to Tulane, and that was a hell of an opportunity for me because my senior year in high school, the team got a huge endowment, and they were club. So I was the first recruitment class going into Tulane sailing.
Wow.
And one, that was a great opportunity for me to start a program. And I'll talk about how that kind of translates into what I was able to accomplish and were able to accomplish at the startup, which ECM is now. But yeah, so all 4 years, it was quite the journey at Tulane Sailing. I was the captain my junior and senior year, and the cherry on top was we won a national championship.
That's awesome.
my junior year. So at the highest level, being able to see that from nothing to being at the peak of our sport was truly special. And throughout academics and my journey at college, I picked up, and I've always had a passion for fly fishing. And
just something about the water. You in the water.
Something about the water.
You're amphibious or something.
Yeah. It's something about it. It's just it's great.
Did you grow up did you grow up doing all this stuff?
Yeah, I got family on both sides of Montana. So I like to say I kind of grew up out there.
Yeah.
Definitely have some DNA in that dirt.
Yeah.
But went out after graduation, I had a game plan to go live out in a van and be a fly fishing guide for an outfitter for an entire season.
If you're watching on video and you look at this guy and he says, "Yeah, I went to go live in a van and do fly fishing," I'm like, wait a second. When they say don't judge a book by its cover, I think
you got to see him in all his gear.
Yeah, I guess maybe that would be a different. Next episode, he's coming in his fly fishing gear. He's going to look like an Orvis catalog.
So I did work for Orvis.
Oh, look at that! See,
I'm sponsored by Orvis.
I know more.
There you go.
Are you surprised that I knew that? I'm even surprised that I knew that. I'm like a fountain of useless information. I just know random stuff.
That is true.
But
very impressive.
Yeah, but that's great. That's super cool.
Yeah.
So you lived in. How long did you do that for?
So an entire season. So like early summer to early fall. And that was great, but it was all part of the game plan. I knew going into graduating college that I needed to get this out of my system. I knew if I didn't do this, there would always be that what if question, like, hey, how am I going to get out there, and am I going to force it throughout my career? And
pretty impressive at a young age. You kind of came to that realization.
Yeah,
you figured that out. I need to do it just to get it out of my system.
But I also knew that I needed to put a hard stop on it, and that was at one season because I know many people.
Otherwise, he was going to be at the Sphere watching the Grateful Dead for their 14th
show.
Yeah, he'd be traveling as a groupie with the Dead.
I don't know what parking lot I'd sleep in at this point. I got kicked out of all of them in Jackson Hole.
Yeah. They'd have his face plastered on all this. Do not let this man near. That's funny.
But yeah, it was a hell of a journey from graduating, spending that season out west, and then moving back to Chicago, not moving into my parents' place because I knew that was also a death sentence. Just from a productivity standpoint, I wanted to throw myself into the fire, see my bank account completely deplete. So that is motivation to completely grind.
I am different, but it's also, I always say everybody's built differently. Like some people, like he knows himself so well that he knew like, okay, I need to do this to get out of my system. Like I can't live at home. Otherwise my productivity is going to plummet. Like to be honest, like, I am different from that perspective, but it's also probably because I lacked a little bit of self-awareness early on that you probably had. And I was like, I almost didn't want to take those risks. And now as I've gotten, I say older, but 5+ years in the business, my risk tolerance has definitely gone up because I'm more confident in myself, like I know what I'm capable of. So.
Yeah. I'd say you knew yourself and it worked out.
Yeah. I mean, well enough, but it's like everything. Like I think you always have a plan, but there's always things that you're always going to be throwing curveballs and have to maneuver and do things differently. I think Ryan Serhan, who's like one of the, you probably know who that is, like top real estate agent in New York, like big residential guy, has a show on Netflix. Like he says, nobody has an idea of what they're doing, but some people do it anyways. Yeah. And I love that saying because it's so true. And the higher level you get, you realize like, wait, like this guy who's got a ton of money and you idolize whatever, like even the people at the top level, they all are just kind of like figuring it out too.
Slowly figuring that out. It's a confidence thing. It really is. It's like you think you have to, there's a path. And for me, it comes from sports. It's like you think, okay, you go from one level to the next. Like there's a trajectory, right? But in business, it's just not. It's just not, yeah.
So you lived in the van for a year, moved back to Chicago after that, and then moved right to the city then?
Yeah, moved to Lincoln Park, actually just down the street. I could probably peek over and see my old
best location.
Yeah, no, it was great. I actually moved in with my brother, and I was doing the job search, committed. I actually made it through the retail season working in retail on Michigan Avenue as I was doing the job search.
On Michigan Avenue, was that at Orvis?
At Orvis, yeah.
I love it.
Yeah, since then the store is unfortunately closed. But
which I always wonder how they had a fly. I mean, is it a fishing? It's like an outdoor store.
So I worked there, obviously to check the fly fishing box. I sold way more barber jackets than fly fishing gear, which I did not anticipate. Yeah, but hey, I know what barber jacket.
I just got a barber jacket.
There you go.
You could still probably sell a barber jacket
better than most
people.
Yeah, that's great. Yeah. That's great.
But yeah, throughout the job search, I knew I wanted to get in real estate. I come also from a family of real estate. My grandfather was in it. My dad is currently working for a larger family office here in Lincoln Park. That has a large presence. My brother works for Bridge Industrial, so on the industrial development side. So I had all of this intel.
It's in your blood,
all of this guidance in my blood. And I talked to as many people as possible. Got a great opportunity to join again at the ground floor of a great opportunity, similar to my opportunity at Tulane with the sailing team. I had the opportunity to be the first hire under a pretty established, parent and family company, which is Essex Realty Group.
Yeah, and anybody who's listening to this, if you're based in Chicago, you probably know what Essex is. But they're top dogs in the commercial space, kind of everything commercial.
Yeah, I would just to simplify that, I'd say they're the prominent mid-market multifamily investment sales shop here.
You could tell he's a commercial guy. He said it a lot more eloquently than I did. I said they're top dogs in the commercial space. He goes, they're mid-market. That's the difference right there.
And actually, kudos to them. They're celebrating this December their 35th anniversary.
Yeah, no, I know a few guys over there outside of you guys and everybody there has been really, really nice guys and has been easy to work with and talk to. And
that's the backbone of how we started. I don't know if you're done.
Yeah, one last thing. So great journey from, graduating, fly fishing to joining Essex, seeing the progression. And then actually last year, at around this time, I bought my first six flat. So it's been
didn't know that.
Great, large journey in the best way, all inclusive.
Where's the six flat
real
at?
estate in Wrigleyville.
Right.
Yeah.
Great.
Yeah. So I syndicated the deal with, my dad, brother, and I are all equal part GPs, and we raised, LP equity.
So
that's insane.
Can you explain for the viewers or listeners that may not know what's a GP, what's an LP, what's syndication?
Yeah.
Yeah. So on the commercial side, many layers here.
Yeah.
But syndication is where you raise outside cash, outside equity. And it's all kind of an umbrella of control, who's making decisions, and the GPs or the general partners, they manage and oversee the entire decision-making process of the entity and just the overall LLC. So that's myself, my dad, and my brother. We're all equal parts, and then we raised the other portion of the equity through LPs, and they are passive investors looking for an X amount of return on their capital.
And they're not involved. So those people aren't involved with the day-to-day
Correct.
meeting contractors, what finishes you're going to put on the countertops. Those
Exactly.
people are silent partners, essentially.
Yeah, silent partners looking just to diversify their cash into something low risk. And I think something that, was our value proposition to raise this cash was, hey, we're low leverage, low risk. We're going to buy a turnkey asset in a primo location.
So it was turnkey.
Yeah, turnkey. And we're not going to, bite off more than we can chew. We all have this experience, and that's in turnkey, just efficient management of an asset. Since then, we've made, great distributions, great returns.
Yeah, I'm sure.
We've hit and exceeded all of our marks.
I'm sure that area is. I lived in Wrigleyville for 2 years.
Yeah, it's fantastic.
2 best years of my life.
Yeah, right over to Wrigley.
With Pat. Well, no, not with Gordy at that point. I lived with Pat, who's our videographer back there. I lived with him for 2 years. That's how we became so close. And he's still not sick of me yet. Can you believe that? I said best time of my life. He goes worst time of my life. It's all right. He secretly loved it. He just won't say it. He just won't say it in public. But that's great, dude. I mean, that's very impressive, especially at your age. I mean, we're all younger guys, but to be able to do that and put those together, I think just is a testament to kind of how it doesn't surprise me as to how fast you guys have progressed in your careers in this side of the business, given what you've been able to accomplish even before that.
Yeah, I think it boils down to two things. How passionate we are about real estate, and our background being athletes at the top of our level. We bring that to the Essex Capital Markets, and we've been able to completely launch this thing.
It's amazing
how many stratosphere.
It's amazing how many people come from sports backgrounds in business. Like I mean, look at your dad's. I mean, how many people come from that side of to the business from a sports background? Like, there's so much correlation between the two. That's why I say sports is just such a great foundation for kids, because it teaches you so many things that are intangible that school simply can't teach you. Maybe not just sports, like any extracurricular. I'm sure if you do high level chess,
doesn't matter.
But it's the showing up on time.
How to be coachable.
How to be coachable. I always say coachable kids become employable adults. All those skills that you learn become so much more valuable, and you don't realize it at 8 years old, but the later on you get in life, it just it sets you apart. It really does. I mean, I have a friend who I just went out to dinner with yesterday. He was a pitcher at a Division III school in Iowa, and his company, I think the two guys, I may be butchering it a little bit, but I think the two guys who started their division or started the company were baseball players from that company, and they specifically hire and look for, I mean, I'm sure they hire other people, but they see people that come from, that school or come from that background, and they know, all right, that's already a plus. And if I had a pros and cons list, that's an advantage that these kids are going to have compared to the average, 100%. Person applying on just, LinkedIn.
Yeah, I mean, I just think it's a mindset thing, and it's not whether, if you play a sport or you don't, one's better than the other. Again, extracurriculars,
right?
Whatever
The sport is totally whatever the sport is or extracurricular.
Just having something that you have to be on time for, be responsible, be a part of a team, be all of the things that go into playing sports, extracurriculars, whatever you want to call it, are very transferable to business.
Yeah.
And like you said, maybe you don't realize it then, but you slowly realize it as you progress.
Yeah. You thank mommy and daddy for that.
Yeah, right.
More, and it's expensive. I mean, sailing and hockey, too expensive. I mean, I'm assuming sailing is. I don't know, but sailing.
You're spot on.
Yeah, I'm spot on. Sailing and hockey, they're expensive sports. So I grew up playing hockey, not at the same level that Asher got to. I stopped playing when I was probably 14, but I still consider myself a hockey player. I kept the hair just so 100%. People don't get it confused. But
and the lingo.
Yeah, and the lingo. That's why I get along so well with Asher. But yeah, I still consider myself my best friends to this day are kids that I grew up playing hockey with, even to the point that I did. So I think it's a really important part. But so tell us a little bit about now, like your guys' business now, where you are, Essex Capital Markets. Like what do you guys do in layman's terms, I guess? Make it simple.
So I wanted to kind of feed off what Quinn said. The whole basis of where Essex Capital Markets started was off of our sister company, the Realty Group. Like you said, they've been around for almost 35 years. They are dominant players in mid-market Chicago multifamily. And the thought process behind that was, and typically, you know, just to understand how the financing realm in commercial real estate works, you know, you look at us and you say like institutional, right? We were laughing about that. To us, we're you know, there's institutional real estate, like $100 million plus deals. And then there's what we're doing. And what we're doing is we're trying to offer a JLL, a Newmark, a CBRE capital markets. So essentially helping you provide or get debt financing, raise equity if you're doing a syndication like Quinn.
Just fill out the capital stack.
Right? Like help people completely finance a purchase, do a refi, a recap, ground, whatever it is.
Do a recap. I love that.
Recap, right? And take that service and provide it to the middle market. And what we call the middle market is deals $1 to $60 million. I mean, we're working on a $350,000 loan, and we're also working on a $21 million loan, or $21 million loan. And I think that goes to show the versatility of why we're here, because this level of service is not in the middle market. Typically, it's you just go to your bank. If you're doing construction, maybe you know a bridge guy or a CMBS guy or whatever it is. But there's not really a middle market debt and equity brokerage helping people from the very experienced to the mom and pop who's never done it before get the best results from a financing perspective. And that's what we're trying to do.
Yeah, I think what's interesting is at one stage, the institutional level and the residential level, those didn't go through brokers. Now it is the industry standard to go through those brokers. And the middle market, because it's made of mom and pops, blue collar guys who own a smaller investment property, up to the family offices that are stuck in the past because they've just been doing it for so long.
The same way.
They've been doing it just the same way this entire time, and it's only a matter of time before Asher and I really expose how much value we can provide to the table and how much savings, time and money, just across a multiple of things. And people in the mid-market start using mortgage brokers.
Yeah. It's essentially what we're trying to do is change the way that people go about getting their typical financing, right? It's typically you call up your banker you've known for 30 years. He gives you the price that the bank is offering. And we're like, hey, the same way you would sell a building, sell your house, protest your taxes, do different bids on, repairs and maintenance jobs. Make a market for your financing.
Yeah.
Come to us. Let us go to our and we'll get into this, 8,000 lenders that we have access to nationwide. Obviously, we don't send a deal to 8,000 guys. We know the top 4 or 5 guys on a specific deal.
They come to you on a specific deal, and you're like, okay, I need
to
call John Smith at X.
In a general box, we know. But we create a package. We tell the story. We really make it a well-rounded position for you as a borrower in terms of your prospective asset to obtain financing, and we're creating a competitive market to get you better rates, to get you more competitive structure, whether that's recourse, non-recourse, flexible prepays, right? All these things that you may not think about, the middle market at least. And I have an example of this. I'll bring it up because it's a good point. We're working with a guy that we're going to close a deal for in the next 2 weeks. And this is a client of ours that doesn't have the best credit, but he has a great asset, and he didn't need a ton of money. He just needed some low leverage. It was about 50%. He was going to a credit union. They were like, hey, based on your credit and yada, 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 the best you're going to get is a 6%, and it's going to come from us here, sign here. He got connected to us, and we didn't believe in that narrative. He was a great guy. The credit, the situation had an entire story behind it. But if it wasn't for the services that we provided, he would not have known that there was a different option out there than the original rate he was being quoted. We ended up getting him almost 75 basis points cheaper, limited recourse with a flexible prepay, right? Like, this is a guy who would have had no choice or no idea how to explore the financing. That's why we're here. And for every, client that is like that, we also handle, some of the bigger guys, like Quinn said, the family offices. But why we're here is to offer that level of service to a market and to a group of investors and clients that have not had this level of service before.
Wow. Okay.
What blows my mind, building off of that story, is how often this happens, where you think you have your relationship lender who you golf with every year or so. They don't give you the rack pricing, 10 times out of 10, maybe 9 times out of 10. As soon as you involve a broker or beat them up, we can step in and just expose the market. And that's how I think we add value. But so many people, will talk to their relationship lender and say, okay, yeah, I trust you that this is the best in the market.
Sign on the dotted line.
Yeah. And then, we go out there and get them 75 basis points better.
But that's not to say, because a large part of our business too is working with clients who simply they're like, we don't want to deal with this anymore.
Right.
Take this off my plate, go to my relationship banks, deal with them. I'm going to let them know that, I'm working through you guys now. That's an entirely different avenue of.
But another value add.
100. We were talking about this today. There's so many different verticals of ways we add value. Some clients may just want new relationships with banks that they don't know. Some clients, they don't want to spend time on it. Some clients need it, and it's a matter of money, potentially, literally a huge amount of savings over the course of a 5-year loan.
When I go to, you're the guy that they go to and provides them the door. Like, they have a door and options that they didn't previously have before, or maybe they had, but or know about, right? And it's the same thing. I am trying to relate it also to what we do when I work with, like, my residential lenders. Is it's like, when I hand a client over to them, I don't really know a lot. I'm not privy to as much of that information, but I know when they go to my guy, he's going to provide them the best level of service, and he's going to provide them, whatever. Okay, like, he's going to advise them. He's not just going to be somebody. He's not just brokering the deal. He's an advisor, right? Like, he's going to provide the service of, like, okay, given your position, given what you're looking for, I think XYZ product is, made for you. This is what we should do. Obviously, with the residential side, it's a little bit of a smaller, brochure of options and a smaller menu, but same kind of principles apply there.
100%.
That's exactly what we are. We're advisors. Technically speaking,
it's a very broker thing to say, by the way. Yeah. I get it. All the people that are cringing, but I think a lot of this is the passion that me and Quinn have. Like, not to interrupt, but, like, we just have a lot of passion towards this, and we're not here to just make it quick. Like, we want to help someone get the best possible financing, whether, like I said, it's that mom and pop, or it's some of the big groups that we work with that own thousands of units. Doesn't matter. There's different needs for us in different cases, but that's really what, we're trying to do.
Yeah.
And on top of that, something that I'm sure is on everyone's mind is how we're implementing AI into things. Okay. And how we can differentiate ourselves from other mortgage brokers. It's an extremely powerful tool. If you're not using it, you got to start it.
I walk in the office one day. I go, we got to think about the 5 ways that AI is going to take us out in the next 2 years. Go.
And there was probably about 20
freaking
ways.
Out. I was like, how are we going to get obsolete? But Quinn's going somewhere here with this, which is how we got access to our 8,000 lenders. But I'll let him touch base on what we're using from an AI perspective.
Well, actually, why don't you talk about that database?
So essentially what we've done and what we've found is we're working with a group, and we are building and implementing AI technology that takes any given deal that we upload to the system based on a certain parameters of metrics, and it will help us match. And like I said, we know typically who the top 4 or 5 lenders are going to be for a given deal, but it helps us match it based on the deal profile, what lenders are active, what are the current. It pulls data from CoStar, from Crexi, from LoopNet, from Zillow, anywhere it can get data, and it is helping us place our deals with specific lenders. And by the way, when I say lenders, I think there's going to be a lot of misconception. It's not just banks. It's credit unions, it's agency, it's life cos, it's CMBS, it's bridge. For commercial, it's not just a bank.
Just not the mafia.
Yeah. Well, we don't go to the mafia. Yeah, I mean, I guess.
Depends how business goes.
Yeah, right?
I'm kidding.
I mean, lender for us is an overarching term for the access of capital for whatever, bucket it's coming from. And so this database that we've implemented and we're constantly building out helps us do that. We're not just, our sister company is Chicago focused. We are nationwide. We've done deals in Denver, in Phoenix, in Philly, in Florida.
Wow.
And so, but we're not as privy to the markets there, but this AI database will give us the top lenders in any given area based on any given deal we do, and whether it's multifamily. And this is another point we didn't make. We're not just doing multifamily like our sister company. We're doing mixed use. We're doing industrial. We're doing retail. We're doing single tenant net lease, right? Like, we aren't just stuck to multifamily. And that's a large part of why I love commercial mortgage brokerage, why I think this is going to, blow up, because we're going to be able to offer, the middle market services we're talking about in different asset classes as we continue to grow. Obviously, a lot of our time right now, Quinn and I's, is spent on multifamily and mixed use. That's where a lot of the clients are from and what they're doing. But we also, said clients are doing shopping centers, single tenant net lease, Chipotle's in Mount Prospect, right? Like, all of that type of stuff we are privy to, able to finance. And a large part of that is because of the AI that we have implemented to do, the deal sourcing per se. And then on top of that, to throw one more thing in, it manages the deal for us, or it helps us. Because imagine, right, if we have 14 deals we're expecting to close in the next 2 months, if we didn't have some software to track all of that, and we had a million different emails on a million different, it'd be impossible.
Right.
So the platform tracks and helps us manage each individual deal on its entirely own software, or whatever you want to call it, page. And so it's been a big part of, us continuing to grow, and we're very excited to see where it can take us. Yeah.
That's amazing.
Yeah,
it's great.
No, it's extremely powerful. And, it's how I use AI, which also translates to using this platform. I don't, rely on this solely. I use it for that, extra 5% that I may have, forgotten, or the extra 5% that I needed just to, round out, the problem I'm trying to solve.
Talk about prompting. You're really good at prompting.
Yeah, I can talk about prompting. Yeah. But, with this platform, and when we're trying to decide which lenders we send this out to, like Asher said, we know the 5 to 10 who are going to be probably the most competitive on this. But when a client comes to us and says, listen, guys, I don't really want to work with you. I don't see the value. I know everybody in the market. I reach out to 10 lenders that I know are going to be competitive on this. I'm like, well, we have access to all of these guys. I can dig up one. And that's when we'll do a larger blast and see who we can expand the relationship to. And, for that client specifically, it's the pricing and all that stuff, but the real value is the new relationship.
Yeah.
It's also important to note, because I'm sure we're going to have some lender friends of ours listening. We are very conscious of our lenders and exposing them to 14 different deals and they get none, right? Like, we as much as the client relationship is important, so is the banking relationship. That's how we're getting deals done. That's how we're getting clients the best pricing. That's how we're getting, our banks to not offer, make clients pay origination fees because they know we're charging one, but if they want access to our deals, right? It all goes into that partnership. And 50% of the business is us managing the lender relationships and having great relationships with our lenders. And so we are very conscious, hey, if we think these are the top 4 guys that are going to get or be most aggressive on this deal, let's give them a look, because if they continue to see deals from us and not close on them, they'll never talk to us. They'll get sick of looking at our deals, going into credit, talking about our stuff, and never closing. And especially if we go to them and ask them to push and, get more flexible on specific terms. And so we're very conscious, and we love all of our lender correspondents out there. And so I just want to make sure.
We value them to a T. to a certain extent, they're our biggest resource.
Yeah.
And we have to maintain those, and we spend a lot of time maintaining those. And to the point where we're hanging out with them. They're coming over to Asher's house. We're hanging out.
Oh boy.
Yeah.
Oh, it's actually a great time. We were
I'm sure. Yeah, no, every time I've hung out with Asher, it's been a good time.
Yeah.
Can't lie
We're
about
stopping in their houses, saying hello
Yeah.
to the family. Like we have great relationships with these guys, and
That's awesome.
That's
it
a
goes
pitch
a long
to
way.
the clients, right?
Yeah.
Like, why am I going to you? I have a better relationship than you with this bank. Like, hey, actually, you don't, because you don't put $100 million worth of deals in front of them, and you're not consistently.
You don't play men's league with them like I do.
Yeah, right. Like stuff like that
Yeah.
all goes into it,
Yeah.
and that's yes, we're working with a client right now who's been in the business for almost 35 years. He's like, and he still had us go to his relationship lenders, and we ended up finding him a new one, and that's what we're going to end up closing with, right? So it all goes back to, again, I'm jumping all over the place here. We're,
okay.
We're
Keep
talking
jumping.
about the importance of the lender relationships, but it's the entire story, right? To make sure that our clients know we are going to highlight you, your property, your project, whatever you're doing in the best light, and we are going to send it to the guys that we know are going to get this done at the best possible pricing.
No, it's kind of. I mean, honestly, you're not reinventing the wheel. You're just taking a proven strategy and applying it to a different market, which I think is honestly, it's the way business is done now. I mean, yeah, sure, you can go out there and invent some crazy product or some crazy software or whatever, but some of the most successful businesses aren't creating something new. It's just taking something that already works, adding a little bit of your own twist on it, and applying it to a market that previously hasn't been. I mean, it's the same thing that I do,
100%.
right? Like I took, and obviously now it's evolved a little bit, but like think about what I did. What, the first 2 to 3 years, just only working in leasing. I took the same level of service that all these people were getting at the buy-sell level, and I applied it to leasing. Those people had never gotten that level of service before. They're 20-some years old, 22 years old, just out of college, don't have a lot of money. Like, who's even looking their way?
No one cares.
Right? No one cares. But same way you guys are doing, $325,000 loans, you're giving that guy the same level of service that I know you're giving to the $21 million loan guy, right? And that speaks volumes to the business that you do and the reason why you've been able to grow so quickly. So I guess we can segue into about that. Like, talk about what you guys have been able to do this year. I don't even know how.
I'm excited, yeah.
Yeah, like talk about some of the stuff you've been able to do this year.
So Quinn can speak a little bit more on some of this stuff. Quinn's been here since day one. I joined in April.
Day one is when?
18 months ago.
Okay, so not too much after. So you both are. I could consider.
20
I could.
months.
I could put you guys on the Mount Rushmore together.
Yeah, now
Both
you
founding
could.
fathers.
Now you could, yes. But so
What would you say, Quinn?
Yeah,
I have to ask Quinn first because he started earlier.
yeah. Well, he can be George Washington.
Okay, yeah, and you can be Thomas Jefferson
Yeah.
as long as he's
Reality,
on Mount Rushmore. I think he is. I hope so.
There's only been 4 people to work at Essex Capital Markets.
And 2 of them are. Is everybody still there?
Yeah, so that's what we'll
Yeah,
we'll
so
get
there's
into.
3 people now.
3 people now. 1 didn't make it.
So that's what we'll get into, and this is honestly, it's an origin story for us, I think.
It's a great origin story.
I love a good
about
origin
it.
story.
You want to tell it, or should I tell it?
Yeah, your perspective would be entertaining.
Yeah, it's right.
It
So
always is.
I started in April. The platform was started by a senior vice president at Wintrust. He has made a name for himself in the Chicago multifamily. Not just Chicago, but outside. Financing, banking, commercial real estate. Right.
Okay.
Came over, started the platform. Killer first year. I think they did it.
In the first year of a startup, bringing any money, real money through the door is really out of the picture. And we closed, close to $95 million in loan origination.
I don't need to be a college graduate to know that's pretty good.
Yeah,
That was a huge win. So something to hang our hat on, and we were very psyched.
Yeah.
And so, like I said, I joined in April. Come 2025, things kind of slowed down Q1, I think, a little bit. We had a couple. You guys had a deal or two.
Yeah, rates were high. People were trying to understand the market and the nuances.
So I come on in April, and in July decided this wasn't the best position for him. He has a family to take care of. He has to do what's best for him. Totally respect it. Still love the guy. Went back to Wintrust. Me and Quinn come into the office. We got sat down by the partners. They told us, and then me and him were in our head. We're like, well, now what? You guys gonna can us? Like, is the company like, what do you? And not only did they not do that. They gave us 125% of support, and they were like, listen, this is a big opportunity for you and Quinn, and you guys can come. And at this point, we had closed maybe 2 or 3 deals, and this was July. And so the partners reiterated, listen, you guys have a big opportunity. Me and Quinn recognized that. We're like, screw this. Let's take the bull by the horns and go see what we can do.
Yeah, I think they, in hindsight, saw something that Asher and I didn't even see in ourselves. I'm sure I'm confident and have high aspirations, but they fully committed to us 125%. And that just fueled Asher and I to hit the ground running. And since then, we've, closed what? How many deals?
So in the last 5 months, we've closed 9 deals. And then we are expecting 14 more to close in the next 2 months. So all in, I think it's north of 100 million in originations but since July and the end of January.
It's unbelievable.
Out of just us being like, this is what we want. Like, he said it too. He started something at Tulane. He was there for the beginning. I didn't get into me and being the president of the ball hockey. That was kind of its own thing, but a lot of my fuel for being at a startup as well. And just like I said, I think people are really resonating with what we're doing here, the results that we're getting, and the fact that you hire me and Quinn, you are going to get and everyone can say this, but you are going to get 120% effort, and we are going to make sure you get the best possible outcome. I think mortgage brokers sometimes get this rap, right? Like they don't, they oversell and underdeliver. We are the exact opposite from a fee perspective. We're here for the client, and we know that in the long term that mentality is better than, and I'm not going to name drop other mortgage brokerages.
Probably don't do that.
But some are, you got to make, they won't do a deal unless they make a minimum of.
Busy guy, see?
Some won't do a deal unless they make a minimum of $50,000, right? Some charge a flat 1% fee, and they don't care, right? We are completely tailored to our clientele, and that's why we say, hey, we're changing the way the middle market gets done, because we're not here to just charge you a fee and see if we can get you a better option. We are going to save you money, and we are 100% confident in that. And that's the results we're continually trying to deliver.
It's that's awesome. And I think speaking to the fact that the company was so willing to support 2 young guys and support them through that journey, I think it's something that I hear a lot when it comes to younger people that are in business is at the start, there's always tends to be a couple people who there's always that 1 or 2 people that are they see something in you that you don't even see in yourself at the time. I know for me that's true. But as you get older, you start understanding what those characteristics are and what those characteristics of those types of people are and why those people saw something in you that you maybe didn't even see in yourself. I mean, obviously, Quinn, you had already had some sort of success previous to that. So I think there was some points on the board for you already, but even still, I think having somebody that's a little bit senior to you guys and people above that saw something in you, they're not stupid people. They know who they're putting their money behind. They could be putting it behind anybody, and they put it behind you guys. Yeah. So that alone, I think, says a lot.
Yeah,
for sure.
And we were very appreciative of all of the partners and everyone at Essex, because really, Essex, what we've been calling Essex Capital Markets 2.0, has been thriving, a large part of obviously what Quinn and I are doing and Elliot, but because our investment sales platform has been making introductions to us, right? We are there to also help their clients. That was the whole point, having everything under one roof. You can come to Essex. We'll help you buy
one-stop shop,
or sell your building. We'll also help you finance it. If you don't want to sell, we'll help you refi. Everything in-house, everything under one roof, right? That was a large part of what we were doing to create.
That makes a lot of sense. Somebody comes to you and they don't need to go to anybody else if they don't want to.
Exactly.
And you do a good enough job with them, they're going to stay with you, right?
Yeah. So, I mean, we're very hard on ourselves. We really do want to deliver for clients. And I say that, someone told me the other day on the phone, wow, you're really good at selling. No, I'm actually not trying to sell you. I'm just really passionate about it, and I want to help you.
Yeah.
And I genuinely mean that.
Right.
Maybe it comes off as good sales because that's the passion, but no, I want to help you get something better than you'd be able to do by yourself, and I want to show you I'll save you time and money.
Well, part about being young, too, and not having the huge, portfolio behind you and Rolodex is you kind of have to perform because you don't have that reputation to fall back
100%.
on, right? Like you're sink or swim. Right.
And your reputation is also your biggest asset.
Right.
And we're trying to perform to create that reputation and fulfill our vision, which is, change the way the mid-market finances.
Yeah. No, that's great. Tell us about some deal stories that you've had this past year. Anything that stuck out?
One just closed that was kind of a textbook definition of, I think, why we exist. One of the many reasons I've discussed so far, but it was a mixed-use asset in Logan Square. It's about a $3 million loan for us. The client, big time borrower, and he needed to do a refi. The asset was 54% of the income was coming from retail. Lenders view that as super risky. So they were getting like a cash neutral quote on a 25-year AM. I'm not sure, if listeners know the difference between.
If they're listening to this point, they probably do.
Yeah, right. If they're staying with it, the 25 and 30-year AM is just how long your payments amortize in theory. So if you had a 30-year fixed mortgage, right, on a house that amortizes over the 30 years, and then you're done after the 30 years paying. For commercial real estate, you can get like a 5-year loan that amortizes over 30 years. So after, the payments are as if you're paying it over the course of 30 years, but it's really the 5 years. And after the end of the 5, you have a balloon and yada, yada, yada. So this one, 25-year AM just means you're making payments faster. Less favorable to investors who really care about their returns because it's just more principal that you're paying down. So anyways, he goes to his bank, gets, what we call, our typical rack pricing, probably 6.25% rate, 25-year AM, full recourse, right? Just, not the greatest of quotes. And that's just, that's the nature of the asset. And this deal happened to, we just closed on it, but when we were in underwriting, it was a little bit ago. And, he was like, hey guys, like, let's go see what you can do. So we took it to our three or four guys we thought would be super competitive. Ended up getting him, almost 80 basis points better. So, for the math guys, right, 80 basis points over the course of a 5-year loan. That's a lot of money that you are saving. Not, on top of, a cash out that we got him, limited recourse. So we reduced his contingent liabilities, right? All of these things that we got him created that competitive market. Meanwhile, this guy has a solid relationship with a huge bank. Right. And you see the pricing and the pricing differences that he's getting. What ended up happening with this deal is, we took it back to the relationship bank on behalf of the client. They wanted to see if they would match. And of course they did. Right. This is why we go to show like, hey, like, we're not here to compete with your relationship bank. We're fine giving them your business, but let's make them
work for
yeah,
a little.
Let's make them make sure they're giving you the best possible deal. And so I think that really resonated with this client. We ended up getting them, like I said, almost 80 basis points better over the course of a 5-year loan, from full recourse to limited, like 10% for the partners, $100,000 cash out, right? So it's not just rate we save you on. And then let's not only talk about, the time we save this guy, right? It's all these different things that went into it. But I love this story because I really think it's a textbook example of, hey, like, we're not just here to ruin your relationship banks. Like, we can aid in getting you a better deal with them while maintaining it.
Yeah.
So I don't know. That's my number one deal story for the year.
It's the quintessential deal story for us, and what proves our value across many different levels. And I boil it down to two things. We can help you save time and money.
And who doesn't love that, right?
Yeah, I mean,
a lot of our clients, even the mom and pop, their time is better. Go find a new property.
Right.
Like go
do literally anything else.
Go
to your lake house in Lake Geneva.
Whatever it is. I mean, but for full-time developers, right? They view getting the financing as part of the job, right? But we're like, hey, we're your for-hire CFO. We can go out and instead of you hiring someone for $200,000 a year to run your capital markets, let us do it. We're going to charge you way less than that. And we have connections with every single bank and more that you could think of.
Let's take a little bit of a pivot here. Let's talk more Chicago specific, kind of what you're seeing. I know, have you had any difficulty with, taxes are a big expense in Chicago. We lead the nation in property taxes, at least on the residential side. I think we officially outpace New Jersey now. So
really,
yeah, I mean,
New Jersey's bad.
New Jersey's really bad too. Yeah. But, You know, like we just saw, I think, the second installment of the property tax bill out, and I think it was mostly they just came out, the 2024 bill. Everything in Illinois is paid in arrears for people who don't know. So, you know, you pay your 2024 tax bill in 2025, so on and so forth. And you saw some people literally get slapped with 50% increases, 60% increases. Average median across the board was 16.7%.
Was it?
Yeah.
See, I'm interested because a lot of our clients, they went down.
Yeah.
But then I have other people I know that went up.
Because it depends on where it is. I think certain areas get reassessed at different times.
Yeah.
So that's really what it came down to. But, you know, how does that affect your guys' business? Like your ability to underwrite deals, things of that nature. Like, does that affect your business at all, or is it really a non-impact?
It's a great question. It certainly impacts a variety of things, but from an underwriting perspective, you know, prior to the second installment coming out, you're, you know, yeah, all right, you know, that sounds about right. You know, maybe slap 15% of EGI on there and call it a day. Maybe do a little bit more homework.
EGI is effective gross income.
Okay.
Yes. Yeah. But now that the second installment has come out, you know, it's a lot more clarity on, you know, what we can underwrite to for a fixed period of time. But say we're looking at a 10-year deal, we need to figure out a way to forecast that. And still the issue of inconsistent, you know, assessments and, you know, just question marks in the air, that's not going away. So it will, and it does affect the loan structuring.
I would assume it affects, like, especially on like new construction stuff, and, you know, big projects, like their ability to go into Chicago and like want to do, you know,
From an institutional, I have a good buddy who works at like an institutional multifamily firm.
Okay.
For them, that's why no institutional money really wants to come to Chicago right now. They look at taxes as a huge headache and a risk. The mayor, whatever you want to say, but for middle market, I think it is a little bit different, right? Like people aren't coming to or not coming to Chicago to do middle market or what we call the middle market multifamily because of taxes. Like it's not as big of a player as it is in the institutional space. Again, institutional is 100 million and plus, right?
Right. And they also probably have the economies of scale, if they're at that level, to go bring their money anywhere else. Right?
Like they view Chicago as a big risk.
Right.
Like I don't know a ton about institutional, but
it would make sense. Like just think through it logically. Like if they're a huge mega company that's got presence across all 50 states, like they can just as easily go and drop their money in.
Well, their returns are going to be better somewhere else, and they don't have the risk of the county taxes.
Right, versus somebody who's maybe a local person or who's always been in Chicago, hasn't really expanded and understands it. You know, maybe it's a little bit more. They're less nimble. You know,
there's people out there that like I think Chicago's like a war zone.
Yeah,
like
they think,
and then like they don't. So no, like I'm being serious.
No,
they literally.
I laugh because I think it's.
I know. I mean, I wish like people could see how beautiful it is out here. Right. I mean, even in some of what people say are the bad areas, it's just a small segment of the media targeting something and what otherwise is, in my opinion, a beautiful city.
Yeah.
And so I think the guys that are here know that. We do work with out-of-state investors that invest in what we're calling the middle market, right? Like they know that maybe you won't know what your taxes are going to be, but it's not going to impact you like it does in the institutional space.
It's also different. Like when I talk to clients too on the residential side, like, you know, everybody that I know that comes here, everybody loves it. Like literally, I've never had somebody, and obviously there's a little bit of a bias there because odds are if you're going to move here, hopefully you're going to like it. But even people who come here to visit, you know, visit their friends, visit, you know, clients that'll move in, they'll visit them in Chicago and they're from, like, they all come out and they say they love it. I think the difficult parts that we have are we have a media that obviously is unfavorable to Chicago right now. The perception of Chicago is worse than Chicago itself. Yeah. And, you know, perception a lot of times becomes reality for a large swath of people. Yeah. Chicago has lost the perception, in my opinion, over these last few years as being like the cool city, right, that it once had. And I think we're at a point, at a precipice where that's going to start coming back here shortly. But, you know, you've seen since COVID, what I've seen happen is, you know, you've seen a lot of these cities like a Nashville, like a Miami, like a, you know, some in the Carolinas, Arizona part, where those have become like cool, hip places. And I think we're starting to see that pendulum shift again, where, Chicago in the next 5 to 10 years is going to be roaring back to
100%.
Yeah.
I'm so high on Chicago right now.
Yeah.
I mean, you saw the boom in Denver, Austin, Nashville.
Exactly.
Rent growth is negative now.
Yeah.
Here in Chicago, I think we're number 2 for the past year on rent growth.
But what about the consistency over the last 25 years? I mean, it's unbelievable.
Exactly.
Like the rent growth here. I mean, it's not going to stay at the 8% or whatever it's been at recently, but like it has been trending in the right direction for as long as I can remember, as long as I've seen my dad in the business.
What's great about it is like it's always kind of that way. Like the coast, a lot of times, is not 100% true, but they have a lot of larger swings, whereas like Chicago is kind of, and even on the residential side too, it's like it's steady Eddie growth. Like you don't see these huge ups and downs like Florida right now. It's like a total whirlwind. Yeah, I mean it's not collapsing. Like my parents spent half the year in Florida. They're snowbirds. Like you saw the market during COVID. You had 1,000 people a day moving there. I mean the prices just went through the roof. Yeah. But they've definitely come down a bit. I think rent growth obviously has slowed down a lot of these areas because they built so much.
Right. Way too much supply. And I think feeding, talking about supply here in Chicago, there's really not much supply going on for many reasons, but I think the biggest reason is outside equity. People are writing checks because they're afraid of the question marks that, in my opinion, sure, they're a concern, but the benefits way more.
Well, it's also the tariffs, the buying of the construction projects.
Well, yeah, but like their projects are getting done in the country.
Yeah.
And they're not getting done as much as they should be here in Chicago. But from a rent growth perspective,
that's good.
It's great. It's great. It's not sustainable just because you need a consistent support of supply.
Right.
But
my whole thing is you just don't want it to get to a point where the rent growth is so heavy that you start having policies put in place that will end up,
hurting,
and doing the exact opposite of what you're trying to do.
Like New York?
Right, like New York, exactly. San Francisco,
yeah.
like Chicago, thankfully, overall, like we've seen consistent rent growth. The prices here aren't what you see in LA. They aren't what you see in New York. So it's relatively, for a big city, it's affordable. My whole thing is you just don't want it to get to a point where people get so fed up and start, saying they're going to start putting these policies.
I think that's why we need this just greater influx of supply in the market. We need to keep on building.
And what do you think the best way to do that is?
Well, let these guys
from
build.
The top. Yeah, we need to support and foster building, and
there's alderman issues, there's permit issues, there's all these, right? Like I don't know who really needs to hear this, but if you want rents to be lower, let these guys build, and then there will be an influx of apartments. It's like that simple. Putting in the rent policies that New York or San Francisco, all these places have, it clearly has not worked.
Yeah.
And why? Because these landlords, they do not care about the buildings if you're making them rent an apartment for $1,000. That should be being rented out for $2,000, right?
Right.
It's, if you want rent to be more affordable, let the developers build. And when I say that, right, like there's, I like I said, me and Quinn have dads in the industry, so I see my dad sometimes, he's doing a couple projects, he has to go to community meetings, then he has to talk to the alderman, then he has to go to like a board. Like it is just for a permit. Like it is the process is
laborious.
Not, it's not streamlined, and that's what causes more rent issues, in my opinion, than anything else.
Yeah, 1,000%. But like on the flip side of that too, it's almost like towing that line, like you said, like you want to have new supply, but you don't want to oversupply like you did in Austin or you have in other places, and then rents start coming down. I mean, I guess
you have to offer concessions.
Right, there has to be some sort of like middle ground in between that allows there enough new supply to come on the market, but not so much that it's going to end up stifling people wanting to come in and put some money in the local market there.
Right.
Because Chicago, I could tell you right now, I mean, I've seen some places, like especially in A+ neighborhoods, A-class product, those rents have elevated very, very well since I've started in the industry.
Yeah, there's high water marks that I couldn't even fathom.
Right. I mean, there's people paying stuff that I'm like, I'm surprised. It shocks me, when I'm helping.
And you're the master.
I like to think I'm close to it.
Good.
I think I'm pretty damn good at it. I think I know the rental market as well as anybody. I think I know the buy-sell market. That's why I'm trying to apply those same principles to the buy-sell. I think I've gotten pretty close to there. On the residential side, like I know these neighborhoods like the back of my hand. I know what people are going to pay. I know how much my clients need to pay to get something locked up. We just had one where it was a 2-bed, 2-bath in Lincoln Park, 450 list. I said, this is what we have to do. This is what the strategy we're going to implement with our offer. I don't want to give out all my tricks of the trade here because, you got to come work with me to find that out. But, it was such a competitive spot. I mean, there's literally no supply of, let's just take Lincoln Park because we're here. 2 beds, 2 baths under $750,000 in Lincoln Park with low HOAs. I mean, if it's on the market and priced even remotely well, no matter what time of year, even in the winter months, it is gone. Yeah. So that was one where we had to go, 45, 50 grand over ask. We had to implement a few, Michael Kaplan secrets up his sleeve on the offer, and we got it done. But the thing is we've seen from our side of the business, we've seen such a tale of two cities where you have the rent side's different. People live the rental buildings in River North, rental buildings in the Loop. A lot of them are still very, very high occupancy. Even times where I'm somewhat surprised. But the buy-sell market's different, right? Condos in River North, they don't sell as fast as they did. The prices have kind of remained pretty stagnant over the course of these last 5-10 years, even sometimes going down.
Curious what you attribute that to.
Well, I think there's 3 main things. I think the number one main thing is the elephant in the room. It's crime, and it's not. I'm not saying that there's more crime or less crime or whatever. There's only certain things that I can and can't say from a licensing perspective, but the perception alone of crime down there is worse. I ask clients, they're like, yeah, why are things so cheap down there? Why are they not moving on the buy-sell side again? Rentals are still pretty high, but they'll ask me that. This guy, everybody loves this guy. Everybody wants to hear him. It's okay. No, it's all good. It's all good. But yeah, that's the first thing is it's the crime down there. People don't feel as safe as they did. And the perception down there is that it's worse. I think 2, you had a lot of people after COVID work from home. So you didn't need to be down as closer to the office. That's obviously changing a little bit, but you had people move up there that didn't really need to. And 3, it's the HOA fees. The HOA fees, no matter what price of your condo is doing, your HOA fees continue to increase.
Wow.
And
I love seeing the videos, and it's like, oh, it's under $250, and then I go to the comments, and everyone's like, well, what are the HOA fees?
Yeah,
what are the HOA fees?
That is
it's the funniest thing ever.
On any realtor video, if there's a condo building that's being filmed, people are going to just spam. Well, yeah, but $3,000 HOAs. Yeah, but HOAs. It's
but they're not wrong.
They're not wrong. I mean, a lot of these buildings, there's a point where the HOA fees are getting too expensive to where it's starting to affect the value of your property. And over time, things need to be fixed. There's, mismanagement within the HOAs. There's yada, yada, yada. And it affects the values of your asset. So that's kind of what ends up happening. But again, on the commercial multifamily side, the buildings in River North, the buildings in, near North Side, even in the Loop, which, the Loop is, from a buy-sell perspective, is one of the hardest markets hit in the country, still seems to have pretty solid, occupancy levels and decent enough rent growth, at least from what I've seen. So
I do want to take a step back, and something that I've always admired about Michael, when you were talking about just the ways that you guys try to differentiate yourself, the way I see it, yes, to me and Quinn have competition. Yes, there are guys doing what we're doing, but not to the extent that realtors or even, let alone, commercial, residential. Yeah. And so what I've always admired is the way you're able to differentiate yourself from the pack. I told Quinn kind of the origin story. I was like, Michael was very smart. When he dropped out, he had a ton of buddies, including me and our whole friend group, right, who were renting. And like he's talked about earlier, they're not getting that type of level of service. And then slowly we all talk because we have networks, right? And all those, all those guys are going to turn into buyers, maybe investors, right? Yeah. And the one thing I've just always loved about you and the way REKAP works is hey, yes, are we doing what maybe 100 other people do? Yes, but this is why we're different. This is why you're going to get 100% of our attention, even your media alone, right? So I just think, and I tell Quinn all the time, I'm I think it's the greatest thing one of the greatest marketing strategies, whatever you want to call it, I have ever seen. Because to me, I'm just like, if I got anybody that I ever think of who's like, I need an apartment, I need a house, like it's ingrained in my head. I'm like, all right, Kaplan. And I have a family in real estate. And I'm just like, no, go to Kaplan. So like that type of marketing, but it's not just the marketing. I do want to it's you as a person. It's Gordy. It's Mike. It's Pat. I mean, it's the team and the culture you've created. And we're also trying to do a similar thing, right?
Yeah.
Like, a lot of times I just feel like brokerages can be cutthroat, right? Where it's, maybe you have your own team, but at the end of the day, it's like you're all individuals, right? And for team sport guys, like that is tough. And so I think, maybe that's part of the reason you probably started REKAP. You could build a team, right?
I think the word that you used is culture, and that's like, to me, that's the number one most important thing with my team. Is like, I can go find, there's a lot of brokers, there's a lot of people I could hire to be on my team. There's a lot of people who honestly like want to be a part of what we're doing, but it's like, I need to be very particular with who I'm having there, because one wrong person, it reflects on me, and it screws that whole like culture of what you built up. And that culture is not something that can be put in a spreadsheet. It's not something that can necessarily be analyzed and quantified. It's kind of like this ethereal, non-physical thing that is just there because of it's like it's aura. We're aura farming here.
So trendy.
He is so trendy.
I think you are 1,000% right. What Quinn and I are trying to do is, like I said, brokerage is very individual. We are a very team-oriented mentality. We're all you hire me, you hire Quinn, you hire the both of us, you hire Elliot. We're all on calls with you as a client. To us, I mean, not that this matters to anyone out there, right? But if we as individuals do better, Essex does better. If Essex does better, we do better.
Rising tide raises all ships.
It takes away the ambiguity of competing with inside your own brokerage over certain clients, over certain deals, right? We are just here to get the job done. And I think it's a very similar thing that REKAP.
Oh, yeah.
And I think it's a big difference. Like, sure, a lot of people say that, but like, I run into a lot of clients, other, brokers or whatever it is, right? Like, some of these guys, all they really care about is checks, right? Yeah. Like, there's that. How do you differentiate yourself from a brokerage perspective? In my opinion, that's
it. Yeah. No, I think it's so true. Yeah, it's so true.
And sure, we want to make money, but at this stage in our career, with this opportunity to create Essex Capital Markets and mold it into our vision, it's relationships. That is our priority.
Yep.
Closing deals to build relationships and not to get a check.
The money's a lagging indicator at the end of the day, right? Like the money will always follow the value. If you're providing enough value, there's always gonna be money at the end of that. Yeah. There's always gonna be money at the end of that. So I guess we're pretty close to wrapped up here. We've had a pretty good episode, but kind of final wrapping up closing statements. Like what do you guys see for the future? I mean, we're almost at the end of the year going into 2026. Sounds like you said, you're looking to make a new hire. Like what do you guys see for the future of Essex Capital Markets? Some personal goals that you guys have for yourselves and the team?
So I think we kind of sat down and did this the other day. From a company standpoint, we're hoping to be, north of 150 million in originations.
In 2026.
In 2026.
Yeah.
Quinn and I expect to probably do half of that ourselves, with the other half coming from our referral chain of the investment sales platform. I think the focus for 2026 is continuing to build off the momentum we built in the back half of 2025. Our 5-year outlook, our plan is to have other brokers on the team, more different teams doing different asset classes rather than just Quinn and I doing all of it, which is great. We love it, but we want to have, a team that does industrial, a team that does retail, right? Yep. Different teams. We want to expand nationwide, because from a capital markets perspective, right, we don't have to just be in Chicago. We have access across the country. We stay with our clients, and we want to be able to offer those services over the years to come, like I said, to this middle market, and we're going to grow that as we see fit.
Yeah, and lender relationships, always building upon those. We're always trying to
go deeper,
improve those, go deeper, figure out who's getting more competitive, because it's such a dynamic market. For most of 2024, the agencies were the top lenders and the top players in the mid-market space. Banks couldn't touch them because all of their balance sheets were locked up from loans in 2020. Now that we're in 2025, looking into 2026, all of these banks and their extensions, they've been able to recycle their balance sheets, and now they're the big players. So it's staying dialed, staying in tune with the market, because it can shift, on a weekly basis.
Yeah.
And
that's why you got AI.
Yeah.
Exactly.
You know what? AI is great. Like, I think a lot of people have been, like, they hear AI, it scares them. They think
use it the right way.
If you use it in the right way, it's like anything, dude. People said, even with, so true with realtors, every 5 years something comes out and it's, realtors are obsolete. Nobody's ever going to use a realtor again. They're going to go all out of business because people think all we do is just open doors, and there's a percentage of realtors, unfortunately, a large portion of them that do that. Yeah. But no matter what ends up happening, people always end up using them. The most recent one was the buyer's agency commission thing on our side. Like, that's going to wipe us out. Nobody's ever going to use a buyer's agent again because you may have to pay them out of your own pocket. In fact, the studies are showing that buyer's agency commissions have gone up since that went away. So, like, there's value in the market for people who are able to leverage what is in front of them. And AI is just another one of those things. It's not going to put you out of business if you know how to leverage it properly and you know how to implement it into your business. That's the way I look at it.
Yeah, I think that is the right way to look at it. And if you're not using AI, you're falling behind. And the end goal, maybe to wrap this up, unless you got another question.
No.
You're probably going to be falling behind if you're not using a mortgage broker in the mid market space one day.
I agree.
Mic drop.
Yeah, mic drop. It's a great way to end it. So I appreciate you guys coming on. What I'm going to do is we'll obviously tag, Quinn doesn't have an Instagram, but we'll tag Asher. We'll tag Essex Capital Markets. We'll drop your guys' information in the Instagram, probably caption. We'll put it in the show notes. We'll make sure everybody knows where to reach you guys. If you are looking for anything related to their services, or honestly you just want to talk to them, like, these are two of the best.
I would love to talk.
Yeah, that's why you come on a
love
podcast.
Talking.
I'm sure you could tell Asher.
Coffee, lunch, happy hour. We're always out and about.
Have my dog.
Yeah,
these
guys are great guys. And if you're into hockey, if you're into sailing,
you want to come watch me at Johnny's West?
Yeah, at like 11:30 at night.
Yeah, whatever you want. I mean, we're here.
They're there. They're not
free
going
fly fishing lessons too.
Wow.
I always tell people I want to be known for two things in my career, and that's real estate, finance, helping people find debt and equity, and teaching people how to fly fish. I truly love it.
People come and ask you to teach them for free.
Group lesson. Let's go.
Right. He loves it. He's up for it. Well, I appreciate you guys coming on. Thank you for your time today. Hope we had a good time, and we'll definitely have to do it again sometime maybe in 2026. We'll get an update as to where you guys are. So, thanks guys.
Happy holidays, everyone.
Yeah,
thank you for having us.
Absolutely.
Pleasure.